Hello and welcome back for my final daily report market analysis video with me, Richard, market analyst at Hantec. On Friday the 27th of March, we're going to look at gold, which has started to consolidate. I talked about this consolidation that I thought was building yesterday. It actually ended up positive on the day. I was actually sort of discussing the prospect of actually a correction yesterday, but it didn't really happen that way. It sort of rebounded once more and actually posted a positive close. But the move today would suggest the market is actually consolidating rather than building a correction. I talked yesterday about 1585 being a key level. If that broke to the downside, then you'd likely to see a move back to 1560. That support held, and we had a low of 1592 before rallying into the close and a decent move higher. But that move has just rolled over again this morning. 1642 has been the basis of resistance formed, and interestingly enough, that comes bang on the 23.6% fib level of the original bull run from 1445 to 1702. So it does look as though that the market is starting to form this consolidation. You can see with the daily RSI just rolling over around 55 area stochastics as well, just sort of losing a bit of their impetus. It looks as though this is a consolidation still with a positive bias. You can argue that remains the case while you continue to post higher lows. But that consolidation does concern me a little bit, given the strength of the run higher that we have seen in gold, and whether you could see a little sort of element of profit taking. For now, though, it remains supported. 40 on the RSI, consistently there or thereabouts, above which the bulls start to come back in. But look at the MACD lines. Limited sort of strength or conviction through those MACD lines. And it looks as though that this is developing into this consolidation that I'm talking about now. So whilst 1585 is intact, you're still pretty positive, I think, on gold, still holding the run of higher lows, and I think it wouldn't turn corrective unless you lost that 1585 level. But ultimately, I think that this is still going to be a medium to long term bull outlook on gold, and fundamentals are all very much aligned to gold pushing on strongly higher from here. But just for now, obviously the element of volatility is still key for gold, and if there's renewed selling pressure that really does hit through markets, and it's interesting that you've got gold trading lower again today as markets starting to come off again. So that is still a little bit of concern, possibly in the back of traders' minds, in the fact that if the markets do start to fall away again, gold is likely to fall back. But ultimately, I think that gold remains positively configured in the long term. Just the near-term volatility is an element of uncertainty for gold. But breaking back out above 1642 reopens the highs and continues the market on its merry way. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. Thank you very much, and I'll speak to you again next week.